Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas I shared recently before knowing the results as usual. I will explain how I am managing those. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time. Using Q systems, you could. Why and how would you buy stocks in a sharply falling market? Why would you do that? Most people would not, and they would have good reason to do that. Panic easily settles in when the market is falling sharply and people prefer not to buy stocks. That is if they enter a panic mode, but that is not a given. Not if you could anticipate the market drop. In the last weekend market recap, I explained why I anticipated a drop in the market and why I closed most of my long trades. I did not enter panic mode when the market fell. Rather, I profited by taking shorts. How did I confidently take shorts? I laid out my plans in the last recap itself. I simply followed that. I was not swayed by flood of media updates and news telling how the market was going to keep rallying following the Fed meeting and some stellar earnings. That short-lived rally only allowed me to execute what I already planned. I will review some of those trades, short trades, in today's session. Now that the market has dropped, others are turning bearish. However, I booked profit in shorts. The question now is, am I ready to buy stocks when others are bearish? When Nasdaq 100 just entered correction territory? When the market fell sharply across the board? What about you? Generally, it is better not to buy stocks in a falling market. But general wisdom is not always the best guideline in a specific market. The correct, profitable answer is more nuanced. It is possible to buy stocks, probably even advisable to buy stocks under some specific conditions, even if the market is falling. What are some of those conditions? If the market is already oversold and nearing a point where a recovery is likely, it may be okay to look to buy stocks. You could assess that using Q bucket analysis and breadth charts, oversold, overbought oscillators. Also, if some pockets of the market fell sharply and is right on support, it may be okay to look to buy stocks in those pockets. You could find that using Q at a glance weekly daily charts. Under the above conditions, you could find strong stocks for buying. What is a strong stock and how to find it? A strong stock is one that is starting to move up while the market is still falling. An up stock in a falling market can be a buy candidate if it is also at a low risk buy point. You could find such stocks in real time using Q Finder. I'll demonstrate that later today. In Q trading, technical setup is not everything. We want more edges to be in our trade's favor. How? The buy candidate need to have strong fundamentals. That is even more important in a falling market. Weak fundamental stocks would have little support from big players. Strong fundamental stocks may attract buyers if they become undervalued. You could check any stock's fundamental scorecard in real time using QVital. What about industry strength? Normally, Q traders would look to buy only in strong and up industries. You can find those in real time using Q Edge. However, that may not be possible in a sharply falling market, as most industries and probably all sectors would be down in such a market. We may look for buy candidates in a strong up industry while being flexible on this requirement when the market is falling sharply. It is important to be fully aware that a sharply falling market is not a friend of stock buyers. Why buy stocks then at all? Why not wait? One reason could be that these trades may turn out to be extra profitable if the market starts to recover. Still, if buying stocks in a sharply falling market, one may take fewer than usual positions, and of course position sizing is as important as ever, so is risk management. And of course, not buying stocks waiting for the market to also turn up is a perfectly valid approach. If one is looking to buy, what kind of stocks one may get? A strong fundamental stock may or may not be in a strong up industry that is bucking the trend and is moving up in a sharply falling market and is giving a low risk buy setup. That may be the best one could get. Are there such stocks in today's market? We'll find out shortly in today's session. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using only one trading system and techniques that I developed myself, Q. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these analyses are open to the public and you are most welcome to make use of them. Q Systems run on Metastock and TradeStation platforms. It has multiple components. I'll use most of them in today's session. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Up to the live session, let's start with a look at the dollar index. dollar index turned bearish. Looking back to past analysis is always useful. When it was falling here, in the market recaps, I mentioned that it would most likely find support because there were many support points there. And it indeed found support, and then this week it broke down below that support, the watermark supports again. On Friday, it fell with a very long bearish shape, bearish color candle, and it also gave a flow trend following short setup. Fell even with big move down 3. That is looking very bearish. And what I mention often while discussing dollar index is that dollar has significant impact on the market, but it's not always that if dollar falls, market will go up, because there are other influences on the market. Dollar is not the only influence on the market. And that is what happened this week. Dollar fell, but the market also fell. Mega caps, among other stocks, have an effect, or dollar index have an effect on mega caps, but as we will see, mega caps did not go up. This is the custom mega cap index in Q Global Market Breadth weekly daily at a glance template. Looking back, almost miraculously the bearish headwind came at the very top. Since then I was cautious. Along the way, as support trend lines got broken, I took shorts in multiple mega cap stocks. I shared them publicly before knowing the results. I made a profit in all of them. What about now? Last week, the last week, the yellow direction line already broke. I mentioned that in the last market recap. And in that recap, I also mentioned that if price could go up to this trend line resistance, that will give a better shorting opportunity. And indeed that happened. Though it tried to go above the trendline resistance, it failed, created a false upside breakout, and on Friday it fell again. These trend lines work remarkably well. If the resistance trend line worked very well, so did the support trend line. On Friday it stopped right on top of the support trend line. Because it is now inside a triangle pattern, it is not allowing me to short, neither short nor buy. On the downside, if it goes down now, there will be one after another trend line supports, and then the white direction line support in daily. Weekly has multiple trend line supports too. Therefore, if mega cap index continues to go down next week, I am not going to have a low risk shorting opportunity. Therefore, for trading purposes, I will prefer that it goes to the upside and breaks the trend line resistance. Then I'll have a low risk buying opportunity easily in the mega cap index. Of course, that is not tradable, not this index. Therefore, I could look at individual mega cap stocks and see which one is giving a low risk buying opportunity. Mega caps fell, and now people may be panicking, but now Q analysis is showing that the lower risk entries are to the upside. That is how I shorted last week, and the same thing where the lower risk entries are, finding that out is prompting me to look to buy now. You will see more reasons why so as I go through today's session. Also, I would like to highlight one pattern that worked over and over again. That pattern is jump thrust high at price extreme high. Together, I call this unsustainable move. Here it is up move. When the move is unsustainable and then we have a big move down 3, big move bearish move, it is almost certain that going forward price would drop further, and that happened. I was not turning bullish even on the Fed decision day or the day after that. I was continuing with my bearish view, and now it has dropped. Now it is at support. Now I am switching my view to bullish side because that is where the lower risk entries are. You may keep this pattern in mind. I mentioned about it in many sessions, and I will do that more in today's session as well. Also notice one thing. Now we have trend line support and trend line resistance. When explaining trend lines, these special memory trend lines, I say one thing, that when an instrument is in an uptrend, it will only have support trend lines. At the very top, when it starts to roll over, support trend lines will get broken one after another. Then resistance trend lines will start to form. And here we can see that resistance trend line has formed. However, we still have support trend lines. So now it is not bearish, not in a downtrend as far as trend lines are concerned. It is in a triangle pattern. But if it can break down below the remaining nearby trend line supports in weekly, daily both, then it will have only resistance trend lines in the charts and no support trend line, and that will be a confirmed downtrend as far as trend lines are concerned. That is a very useful application of the memory trend lines, not only to know the trend but also see how the trend is reversing from uptrend to triangle as here, and we will see if it turns to a downtrend going forward or if it resumes uptrend again. If it resumes uptrend, that means if it goes up, breaks the trend line resistance, then again we'll have only trend line support, no trend line resistance, and uptrend will resume. Why I came to this little bit detailed discussion on trend lines is that mega caps is probably the only instrument I'm going to show today as far as market instruments are concerned that has a trend line resistance. We'll find out if that is true. Let's look at another instrument, also part of Q Global Market Breadth, and my metastock is crashing from time to time. That happens sometimes during the weekends, especially when I conduct the market recap. So I'll restart it because some of the charts I can open only on Q Global on Metastock. Please bear with me. Leaders Index. Leaders Index is a index of the market leaders. It has stocks from all the sectors. And I created that list of stocks when the market was rallying at this point, not when market stabilized. It is very useful to see if the leaders are breaking down, because the thought is, and thanks to Dr. Jeffrey for this idea, I incorporated this into my trading discipline, trading methodology based on his videos. The thought is that if the leaders index breaks down, Leaders index represents the strongest stocks in the market across all sectors, not one sector, two sectors, all sectors. If the leaders index breaks down, then the market rally may be over. Has it broken down? We can look at it from multiple angles. One is that in the daily, we see prices moving between watermark, pivot, resistance and support. That's a sideways move. It's not bullish, but it is not bearish. We can also see from what I described just a while ago that we have trend line support in daily, weekly both, but we have no trend line resistance. So first we will have to have trend line resistance and then the supports need to be broken. It will take a while for the leaders index to be in proper downtrend. It's not going to happen anytime soon. The white direction line is also intact. And as far as price move is concerned, now you can see that leaders index is doing better than mega cap. Today's theme is how and if to buy in a market that is sharply falling. From these two charts, even before going forward, one thing I may conclude, you may conclude that even if we are looking to buy something, we will not buy mega caps because that is the only instrument. I'll show more market instruments later. That is the only market instrument that has trend line resistance. It is in a triangle pattern though, not in a downtrend yet. Leaders index, the trend is still intact, the uptrend. An uptrend or a downtrend also, but now it was in an uptrend. Uptrend is intact until it is proven otherwise. And leaders index did not prove it otherwise. That may be one reason that one may not be reluctant to buy, but I will elaborate more on that theme going forward. Let's now look at the market ETFs, and today I'm going to use Q Global for the market ETFs also because I want to look at the momentum charts too. I don't do that in every session. I just look at the Q at a glance chart, but today I want to look at the momentum charts also. That's why I'm going to use Metastock. Here the layout is readily available with me. Let me open it. It will open on the other monitor and I'll drag it to the presentation monitor. This is QQQ. Immediately one thing you notice, again referring back to what I described just a while ago, it has no trend line resistance. Yes, weekly trend line support is broken. Yes, daily this trend line support is broken, but there is another trend line support nearby and no trend line resistance has formed. Therefore, as far as trend lines are concerned, it is still in an uptrend. Of course, I could short and I shared that publicly in market recaps of those times and I made a profit on those shorts because those were reversal trades. Even as of now, it is not in a downtrend. This week's candle fell. It closed below previous week's low. For last 3 successive weeks, we have high volume down move. If we look back to the screen length, that has not happened before in recent weeks. This is longer term weekly interval. So certainly it has dropped sharply, unusually sharply compared to recent months. But the time to short was near the top using reversal setups, not now because of several reasons. One reason is it is already far below recent swing high, and even if you consider this as a swing high, the distance may be a bit too much to take a short trade. Another reason, of course, is that very importantly, we have a bullish indecision at the low. That is not a candle when I like to short. And other reason is, of course, there is nearby trendline support. And it is looking stronger than mega caps. So mega caps is certainly the weakest pocket in the market now. But even mega caps did not allow me to short. Keep that in mind. Mega caps are the strongest pocket of the weakest pocket of the market right now. It is inside the triangle, therefore even that is not allowing me to short. QQQ not allowing me to short. Is it allowing me to buy now? No, QQQ is not allowing me to buy. And I will like to point out this beautiful pattern, jump thrust high, price extreme high, together it is called unsustainable move. Then came big move down 3, worked beautifully, and I tend to say it hardly ever failed me, especially if the fundamentals are aligned. That was QQQ. And as usually, I think I'm going to spend a lot of time on the market, and that is the open secret of why my trading direction choice is very accurate. I think for swing trading purposes, it is more accurate than many other traders, because I look at the market in detail using all colorful signals. So let's spend some more time again, and you will see why last week I could short and why I am not able to short now. Instead, I am looking to buy. If you are following my videos, you know my analysis is pretty accurate. This is SPY. Again, falling back on the trend lines discussion, we have broken some trend line support in both daily and weekly, but there are other trend lines below and there is no resistance trend line. Therefore, we cannot say from trend lines perspective, and these trend lines work beautifully, we don't ignore them. It is not in a downtrend in that way. Once again, I'd like to point that jump thrust high, price extreme high, unsustainable up move, came bearish big move. That was one reason why I was not buying even when the market was rallying. I was ready to short. I did short, not SPY but few other instruments, and now I booked profit because here also the bullish indecision is not allowing me to short. The trend line support is not allowing me to short, and the candle shape is indecisive, also not allowing me to short. Is it allowing me to buy now? No, not yet. Let's look at IWM. And this is one instrument that was rallying sharply in the last few days, specifically here. In the last market recap though, looking at this candle, by when we had big move down 3 after jump thrust high, price extreme high, I very unambiguously mentioned that I was going to short out IWM, whether it went up and came down, whether it created a false upside breakout, or whether it came down right from there, I was going to short IWM, and I did that. How did I trade it? When I had the bearish headwind signal that day, I shorted IWM with short call vertical, and I kept enough time with me, 2 months to expiry, in case it took a while to come down. And remember, after Fed meeting, after some stellar earnings, market rallied. And what did IWM do? Let me expand. IWM created a beautiful false upside breakout. And that is exactly what I also mentioned in the last market recap, that I'll be even happier to short because my fill price would be better if it created a false upside breakout. So I already took a short using short call vertical when I saw the false upside breakout, That was the Fed meeting day. I shorted more, and this time I was more confident. I used long put vertical. Perfect timing. It fell down sharply. Along the way, I even rolled the short call vertical. Let me clear the charts again. I am now going into trade management. When I entered short call vertical on this day, my short leg was just below the price, just below the price when I entered the trade. By Thursday's low, the short leg was far out of money. I had a nice profit in the short call vertical. So I closed that short call vertical and established another one with the short leg below, just below the price of that time. Next day price fell again with a huge gap down. I closed all my short positions in IWM, and notice how once again I could be ahead of many other traders short it using unique and very useful reversal signals. And when others are turning bearish, I booked profit. Again, why I booked profit? It has trend line supports nearby. I would not like to hold short positions near trend line support. It has supports in both weekly, daily. It has a bullish indecision candle, not a time while I like to hold on to shorts which are already in that much profit. And for options trades, profit can erode very fast if price goes up. So I did not want that. I had a nice profit, I booked. And now I come to why I wanted to look at the momentum charts too. Another reason I booked profit was because IWM held the 50-day moving average. In the momentum chart, the dash dot yellow line is a 50-day moving average, not the Q yellow direction line. This is 50-day moving average, and IWM held the 50-day moving average, not a point where I was going to continue to hold my short position. And that is also giving me some reason to look to buy, because price may go up from here. Notice it is still in an uptrend, right? It went up sharply, pull back to 50-day moving average. Dr. Jeffrey Scott calls it free parking, meaning that this is a lucrative buy point, potential lucrative buy point, but price has to go up first. But because of that reason also, I closed my shorts in IWM with profit, all of them, and I'm actually now looking to buy. Also notice, going backward now, the IWM rally really started from here. Before that I bought. When everybody turned bullish, I was starting to book profit. When everybody was bullish, I started to short. When everybody is bearish, I booked profit. Effectively, price came down to the same point where I bought earlier. And some of those stocks, those were strong fundamental stocks, might have also come down. Not exactly to the same level, because those were stronger stocks in terms of fundamentals, but those might have also come down. And I am probably, or I may omit the word probably, I'm going to look to buy those stocks at a low risk buy point again, if it starts to go up. But I may also start to buy some stocks on Friday itself. I did that. I'll come to some of those stocks. That was IWM, held 50-day moving average, has trend line supports. And let's look at DIA. DIA is the strongest of the market ETFs now. It was so for a few weeks. That's why it is good to have two charting platforms. Sometimes one platform may be taking a bit more time to load. So I am now looking at dia on Q Elite on TradeStation. Notice few things here. Again, from the trend lines point of view, yes, this trend line is broken, but there are many more trend lines nearby and there is no resistance trend line. All these are support trend lines. Also notice this is the only instrument that held even the yellow direction line. Very indecisive shape candle, and on Friday it bounced right from the trend line support. So on Friday, if you watched in real time, this is one trade I take often. I knew that the market was getting oversold. In an oversold market, if one of the market ETFs hits a trend line support in daily and or weekly, starts to go up from there, using real-time precision entry chart, I like to take a long trade using short put vertical. I was not watching dia throughout the day, my night time, but that is one trade I take happily because that tends to be low risk, high probability trade, but I did not. Anyway, it held the support, and if I go to the momentum chart, I have that here also, but not on the same page. It held 50-day moving average also, free parking area at, as Dr. Jeffrey says. So again, that is not a point where I would like to short. I would like to look to buy. As I am going through this presentation charts, you are probably going to see why I am now reluctant to short and I am slowly favoring buying. What is the summary of the market ETFs? I am reloading Metastock again. The summary of market ETFs, the external view is that all the market ETFs fell with high weekly volume and all of them fell below last week's low. And if you noticed, Friday's close was also below Friday's open for all the four market ETFs. So if we are going to buy any stock now, that stock should do better than the market ETFs. One way to know that is that that stock may close above previous week's low. That is one way we will know that it is doing better than the ETFs, because ETFs fell below last week's low. But if we have a stock that did not fall below last week's low, that is stronger than ETFs. Also, if we have a stock that closed higher than the open on Friday, all the market ETFs fell from open to the close, but if we have a stock that closed higher than the open on Friday, that's another way of knowing that the stock did better in the week and that stock did better on Friday as well. I'd like to buy such stocks that is bucking the trend, but I would also like to have a proper buy setup. I'd like to have a fundamentally strong stock, and we may or may not have strong up industry. We'll find that out. Because there are many people probably worried about the market, I'd like to look at some more market level instruments that I don't do in all the market recaps. I'd like to look at the composite charts. I'd like to look at them again with all the three charts. So let me try to open again on Metastock. What I am doing by all this chart analysis is to find the strongest pocket of the market, because it's a sharply falling market. I cannot short now because it has already dropped, but it is still falling. So I want to find a pocket that is the strongest and buy there. So far we saw dia is the strongest pocket. We saw mega caps is the weakest, but I want to know more about that. And let's look at the broad index, two of them composites. This is Nasdaq composite. Technically it broke support in both weekly and daily, however barely so. And again we have a bullish indecision at the low in daily, not allowing me to short. Again, going back to the same trend line discussion, we have only trend line supports, no trend line resistance. It is not in a downtrend from that point of view. And if we look at the yellow direction line and 50-day moving average, yes, both of them are broken, but still the supports are nearby. I am not allowed to short. Notice once again, and this pattern has worked so well, I keep on coming to them, and this pattern has worked long side and short side both in all market conditions. And there is a logic behind it. Jump thrust high, price extreme high, unsustainable up move, came big move down 3, somebody, big player sold, and that selling may not be over in one day, it fell more. Nasdaq Composite fell but does not allow me to short as far as trend lines are concerned, it is still in an uptrend. And now I want to come to what looks like the strongest pocket of the market, and very surprising because it's a very broad market instrument, that is New York Composite, New York Exchange Composite. Very strong, isn't it? Both the weekly and daily trend lines held at the yellow direction line at the 50-day moving average. Only trend line supports, no trend line resistance. It is looking very strong. In fact, of all the market instruments I shared, this is looking the strongest. That surprised me a bit, but surprising or not, that is where I would like to buy. I thought this was an interesting finding that New York Composite is in fact the strongest pocket of the market, and it is a very broad pocket. I later on try to drill down into the composite and look for buying candidates from there. So I'll do an index analysis. But again, this session is going to be a long session because I want to cover meaningful analysis across many dimensions. So far we looked at the external view using market ETFs and composites. Composites are saying that the uptrend is intact as far as trend lines are concerned, and New York Composites is a pocket where I can look at for buying. Now let's focus on the internal health check. USA market breadth total view. Very powerful single chart internal health check. Now looking back, we know why Q traders never ignored the Hindenburgs, never ignored the Bango signal. Bango was developed by Mr. Ian Woodward, may him rest in peace. These are alert signals. They are not necessarily immediately actionable, meaning they don't tell us to short outright, but under the hood, shorting is going on, selling is going on, and eventually price comes down. It did. And this week we had something that we did not have for a very long time. We had distribution counts in red color. But Thursday we may ignore, it is orange color, only one. We have distribution count only on Friday, meaningful distribution count only on Friday, that came in Nasdaq, NYSE, Russell 2000. But all of them are either too much down like IWM, near support. New York Composite is very much in support. Nasdaq does not allow me to short. And if you notice the candle shape, it is indecisive candle. And I'd like to now further look at it using the at a glance, and I clicked the wrong button. I want to look at it using the momentum chart also. I didn't do that earlier. Let me find out what it is showing. Is it near some support in the at a glance chart? It broke some trend line support in both weekly and daily, fell for 3 weeks in a row, has not happened in recent months, fell with heavy volume, but it is near other trend line support in daily and weekly. It did break the yellow direction line and 50-day moving average both. Again, it has only trend line supports, no trend line resistance, so we cannot be too bearish on this. Anyway, I am not going to short because trend line support is nearby. If anything, and this is what you saw in several market ETFs, trend line support in daily is little bit below Friday's low. I would rather price calm down little bit more across all these charts, hit support and stop there. That will give me very lucrative buying opportunities more and more. Of course, I'm going to buy some now itself. Why, I'll explain. I did buy some, I'll explain why, but I'll be happier to see these supports hold. I'll actually be happier if price comes down little bit and all these supports hold rather than price going up immediately, because then I'll have the support as another reason. Once again, even for total view, jump thrust high, price extreme high, came big move down 3, price came down further from there. That was also a reason I was not buying into the rally of last week in the initial few days. If I close the at a glance for market breadth total view, 3-month new high low, the oscillator came down, but it is not oversold. So as far as the overall market is concerned, I am not having a scenario that it is too oversold to start buying. But the other scenario I discussed about, two scenarios under which I may buy, you may buy, even in a sharply falling market. Those two scenarios. One was if market is so oversold or some pockets are so oversold, known from this 3-month new high low or 50-day moving average, percentage of stocks above that. If they were too oversold, I could start to buy. Or if some of the instruments are near support and NYA, the New York Stock Exchange, is right at support, that condition is true. Total view is not oversold enough for me to short, but I did capture the snapshot. I am not going to risk opening them in live charts, it may crash Metastock, but I did capture the charts. This is market breadth of the composites, Nasdaq and NYSE. Nasdaq, you see, is now at the extreme oversold position from where a move up is likely. That is certainly not allowing me to short. I'm going to wait to see a tick up. Then I'm happy to buy Nasdaq stocks also. NYSE, I'm already ready to buy based on the New York NYA, the composite chart that I showed. That is the strongest pocket of the market. And remember, I showed that IWM gave up all the gains from the recent rally, and I mentioned I bought fundamentally strong stocks before the rally. I may look to buy them or others again. Let's look at the major indexes breadth and notice Russell 2000 breadth particularly. The 3-month new high low is very close, not there yet, but very close to being so oversold that a recovery will be likely. And again, if I may go back, remember that 3-month new high low for Russell 2000 has a little bit more to go to be extreme oversold. as far as this oscillator is concerned. And if I go back to IWM chart for a minute, it has to go just a little bit to find support on IWM technical charts. That's why I mentioned I will rather prefer that price comes down a little bit next week, holds all these supports across multiple dimensions, let IWM, that is Russell 2000 internal breadth, and also some of the other breadths like Nasdaq internal breadth become so oversold that a recovery is likely, and I am going to buy even more at that time if that happens. So far I have no reason to short. I have some reasons to start to buy, specifically in NYA, New York Composite, but also start to look to buy in Russell 2000 and even Nasdaq Composite if it comes down a little bit and supports hold. So far we looked at charts, but we have some more market level analysis to cover. I'm going to share one slide first that I shared in the last market recap, and I made a comment. This is a snapshot I took from last market recap. I looked at the sector industry stock breadth, and I made this comment last week that this is looking too overbought. That was a comment I made in the last market recap. Too overbought, too green, 90, 100%, 80+% almost across all the charts. That was one reason I did not buy. I am able to see this overbought, oversold condition across multiple dimensions. Helps me a lot, helps anybody who is watching them a lot. And look at sector industry stock breadth of today. 5-day, 2-day, 1-day, all are now very red. Even 10-day is overall bearish. 1 month is still bullish. So my anticipation last week, and I stopped buying, I closed my long positions, was perfectly timed. Once again, is it allowing me to buy? No. As far as this sector industry stock breadth chart is concerned, it is still bearish. I would like to have tomorrow's plot, which will show up in real time here on the left side. It will change from 1 day to real time during market hours. I like this to become green, but as I mentioned, I'll be happier if market drops a little bit, maybe in the morning session, hit those trend line supports in multiple instruments, and then start to go up. Market may not do that, but another thing that we have in QH is the bucket analysis, and bucket analysis shows oversold condition in Q in two ways. One is if the percentage of stocks in the lowest bucket, that is below lower Bollinger Band, goes to 30-40%. It did not. It is around 15-16% now. So that way it is not oversold. But here I also am able to look at the jump in percentage of stocks below lower Bollinger Band in 1 day. That jumped from only 1.1% on Thursday to 15.9% on Friday. Whenever this jump in 1 day is more than 10%, it is moving down too fast. That is also a kind of exhaustion, and that is usually not sustainable. And that is where finally I see an area where it is so oversold that it allows me to buy. We had almost oversold condition in Russell 2000 breadth, also Nasdaq breadth, and now we have a proper oversold condition. So again, I mentioned two conditions, two scenarios under which I am willing to start to buy in a sharply falling market. One is if some pocket is so oversold that a recovery is likely. That condition is now true from bucket analysis, and the other is if some pocket is right at support. That condition is also true now. So both the scenarios are true in one pocket or another. That is allowing me to buy even in a falling market. But we have some more analysis to go at the market level. The technical breadth, weekly interval. This was very bullish last week. It is flip-flopping in fact from 1 week to another. The headwinds in weekly are telling that going forward more pain is likely, especially for stocks that are displaying the bearish headwinds. And what are those stocks? Those are at a very high price level even in the weekly interval. So those stocks may face more pain ahead. So I'm not going to look to buy stocks at a very high price level. If I look for stocks today and see how I am combining one insight after another to find which pocket to buy, I am deciding based on this that instead of buying breakouts at the top, I would rather buy stocks that are holding support at a lower price level. And here I see another point where it is looking too oversold across all the categories in weekly interval, and whether weekly or daily, whenever it hits across all categories 80 to 90%, that is oversold or overbought if it was green or cyan. So this is also oversold. That is a reason that allows me to start to look to buy. If I look at Friday's statistics, technical breadth from Finder, that is still bearish. Some reversals in the bullish direction. Reversals usually come at a lower price. So again, I am more inclined to buy stocks at a lower price from this chart. Of course, the absolute number of reversals on the bullish side is much less than the bearish on the strength and continuation side. So by no means it is a bullish picture, but if at all I am looking to buy, I may look to buy stocks at a lower price level. That is how I am combining all the insights. Now let's look at some of the trades that I took and how I managed them. I mentioned about the IWM trade in the last market recap, how I planned, and today I explained how I managed, how I closed. And that pattern is so useful. I am using it in multiple stocks, and I want to go in a bit more detail in one of the other trades that I did not share earlier, but it has the same characteristics of IWM. I would also like to show something on the vital and edge for these stocks. The more I explain how I am trading, probably you will also get confidence to trade in a similar way over time. As you see that my success rate is quite high. This is not Morgan Stanley, sorry. It is also down, but I did not trade that. Sorry about that. That was Goldman Sachs. Let me change that. Goldman Sachs is displaying a bearish headwind at the very top. There are few reasons I came to this stock. We saw a bearish headwind alert in the weekly interval in Q Finder. That alert is coming from stocks like Goldman Sachs. That is why I'm reluctant to buy stocks at a very high price level. Not only those which are displaying bearish headwind like here, but in general. There is more pain likely ahead for those stocks. Now, why and how did I trade Goldman Sachs on the bearish side? I used the same pattern in daily price extreme high, jump thrust high here at price extreme high came big move down 3. I shorted right at that time using short call vertical. I had enough days to expiry, same like IWM. I kept enough time with me, 2 months to expiry. IWM did same thing that Goldman Sachs did, created a false upside breakout. And just like I did for IWM, I added to my short position in Goldman Sachs at that time. I used the real-time charts, shorted near the upper half of the yellow candle, but this time I shorted using stocks because that has the maximum delta. Shorted using stocks. And on Friday, when it came to the trend line support, yes, it was piercing below that, and then it had a yellow direction line support. I closed both of those short positions again. So this Goldman Sachs shorts, I use a familiar pattern. I closed it. I think more pain is ahead, but immediately there are some supports. That's why I booked profit in this trade. But another reason I came to this stock is to reiterate what I tell sometimes, that I am aligning forces from multiple dimensions, be it long trade or short trade. But one dimension I am willing to be flexible with when shorting the top of a stock is the fundamentals. If you look at the fundamental scorecard using Q Vital for Goldman Sachs, medium valuation and high growth, that does not allow me to short if I used fundamentals also for this stock, because for shorting I need usually an overvalued stock or negative or decelerating at least earnings growth, but that is not true for Goldman Sachs. But I was willing and I did short because that is one dimension I'm willing to ignore sometimes, that is when shorting the top, but not when buying the bottom or anywhere in between top and bottom, only at the top. But the industry I don't like to ignore, and if you look at Goldman Sachs industry, in fact when I shorted, the media was talking about how strong financials were, but they tend to be a bit behind. Using real-time Q edge, I could see that yes, it is not the weakest industry yet, but it was starting to be at that time, even pace 1 and pace 2, the most decelerating industry. That is a turnaround bearish industry. I'm happy to short it. And now if you look at the industry score, that is in perfect alignment with my trade that I shorted the drop. An industry that was so strong for so long, I expect the strong fundamental stocks in that to be at a higher price level. Goldman Sachs was that. As it was starting to decelerate, I don't like to ignore the industry usually. Current market situation may be one, I explained that. It's difficult to find a up and strong industry in the current sharply falling market, but that was an uptrending market, but I could short a stock based on industry deceleration and technical signals on the chart. Few more stocks I'd like to go through to explain how I managed them. I mentioned that I would like to buy fundamental strong stocks. See, when buying, I'm never ignoring it. And that is very important because in the last market recap, I shared only two stocks for buy candidates. One was RYAN. And see how RYAN did. In a sharply falling market, this stock rallied like anything. Cannot expect better than that move, up move, even in a bullish market. In a sharply down market, this stock rallied. I did not buy. I did not buy any stock last week, but that's fine. The analysis I shared in the last weekend about RYAN worked beautifully, and this was a proper fundamentally strong stock in terms of earnings growth. So when buying, I am reluctant to ignore the fundamentals. And also, if you look at its industry score in a very weak market, if I look at its industry score, QH is so helpful. It is one of the strongest industries now, and it is actually up even on Friday. We could know all this in real time and decide where to buy if at all. So RYAN was one stock, fundamental mattered. And remember also in the last market recap, I mentioned I closed many of my long positions and also mentioned for a stock like EXEL, Excel, I would not or you would not have any reason to close immediately, and that time it was here. And I also mentioned if those trend line resistances hold, price reverses, we may close the entire position without waiting, but if it broke to the upside, there would not be any reason. This also worked very well. See how the stocks I selected in market recaps, and the ones that I decided to hold, suggested holding is okay. They did pretty well. Fundamentals matter because this stock is not only high earnings growth stock but also undervalued stock. So that's a 3-star with insiders buying. Now let's come back to today's theme. I would like to find some buying candidates. Oh, I'm doing quite well. 1 hour 7 minutes. If you're still with me, thank you for that. Let's do today's theme. New York Composite is the strongest pocket of the market. I'm going to find the constituent stocks, everything in real time. I don't store them. The list is never outdated. Retrieving them from Refinitiv. I need, I think, about 10 minutes or so more to find some buying candidates, and some I bought. I'll explain that. I did the exact same analysis on Friday before market close, so I could find some of these candidates. Okay, it could not find the constituents. Let me pause and play again. Let's see if Refinitiv can return the data. If not, I saved it. Sometimes I know Refinitiv does not respond well during market recaps. So I saved the New York Stock Exchange composite list, but now yes, it can generate the list. Give it a few seconds more. Let it update the pie chart, and the pie chart will look bearish. The advanced decline, yes, it is bearish. 83% of New York composite stocks are down on Friday here, but still this is the strongest pocket of the market. So I'm going to create a fundamental scorecard of all those stocks, the few percentage stocks, 10 something percentage stocks that are up. I'm going to focus only on them and see if they have a proper trade setup. And as I explained earlier, I'm going to look to buy at a lower price level because the bearish headwind in weekly is still telling that more pain is ahead for stocks at a higher price level. Yeah, combining all the insights together, unambiguous insights leading me to very unambiguous way to find buy candidates. By the way, while it, okay, it has retrieved the data, I wanted to come to one last stock after doing this investigation. It has updated the data. Only 16% stocks are up on Friday. I'm going to use the smart filter to look at only those stocks, 308 stocks. But fundamentals are always important for buying, and even so in this market, so I'm going to outright click green 1 star. That will give me either stocks that are undervalued or with high earnings growth. I would like to have one of them, high earnings growth, in this column. So I have these 151 stocks, but I don't want to look at them. So it is not insignificant, isn't it? 151 stocks that are fundamentally strong in one way or another actually went up on Friday, which was a very bearish day. But I was not panicked because I had short positions. Why would I be panicked? I booked profit in them. So I could see all this and I could click this single button to look at their finder information and which one of them gave a potential buy setup. Only 24. New York Composite has thousands of stocks, but I'm now left with only 24 stocks. What are they? They are strong fundamental stocks up on Friday, giving one or more buy setup. But I want to look at only the ones that are price extreme low, at price extreme low. Of course, you could look at the others. I don't have time to also look at them. These three stocks, and I'm going to, my MetaStock crashed. Let me open MetaStock. In fact, okay, I could also look at them on TradeStation. Let's look at them. KenView, KVUE. This is KenView. Is it looking like a stock to feel panic? No. As if nothing happened this week on the bearish side, isn't it? The weekly support beautifully held, created a small false downside breakout. Last week, after many weeks, the backdrop color turned bullish. This week it is remaining bullish. In addition, has bullish flow, has a big move up 3. Weekly is saying everything is all right. There is no bearishness at all, not what we see in the market. Daily is great. Bearish, sorry, not bearish, bullish headwind caught the near the very bottom, as price often does, tried to create a retest it and created a false downside breakout. Then price went up again. We in fact have a confirmed flow long setup in KVUE. KVUE. There is no bearish sign at all. That is the stock that is bucking the trend. And now is the time to look at these stocks one page scorecard. Let's do that. We know it is either undervalued or having high earnings growth, but before finalizing on a stock, whether in this market or any market, I like to see this one page scorecard, and it has reasons to buy in fundamentals clearly. Undervalued stock, and not only that, it has a nice dividend yield. If federal central bank Fed is going to cut interest rates, the stocks with dividend yield are going to be probably more attractive. And in any market, but even more so in the current market, I'd like to have a profitable stock. This company makes profit, revenue went up. In any case, the valuation and dividend yield allows me to buy. Let's look at its relative industry score. As we can see, majority of peer stocks went down. That was expected because of the market weakness. But the industry has some reason to buy as well. Yes, it is down. Again, as I mentioned, in such a sharply falling market, finding a strong as well as up industry may be difficult. This shows why it is though it is down, it is actually improving in strength from one of the weakest to improving. That allows me to buy when looking at the fundamentals, and even more so when looking at the technicals. Let's look at the two other stocks, ACI. By the way, very unambiguous analysis, isn't it? Not looking so bearish again. Weekly had the bullish headwind. So far it is able to catch the very low. We still have bullish backdrop. Price came down in an orderly fashion. Remember what I mentioned. To find a stock that is outperforming the market, we have multiple ways. We saw all market ETFs closed below last week's low, but this one did not. This one closed well above previous week's low. Another way, Friday, all market ETFs closed below open. This closed well above open with a very bullish shape, bullish color candle, and if you apply the checklist, this also is giving a flow trend following long setup. By the way, the bullish headwinds in daily also helped. Jump thrust low, price extreme low, big move up 3. Even more reason for me to buy this stock on Friday, and I did that. I am already having a long position in ACI, and this time I would again like to go, let me check the one page scorecard also and the industry strength to elaborate on what I explained already. Fundamentals I would not like to ignore, not when buying, but industry I may be flexible in the current market condition. Again, I see in terms of valuation, it allows me to buy, has some dividend, not a lot. Important for me always, but even more so now, it has to be a profitable company. It is a profitable company. I think majority of stocks will still be down. Yes, majority of stocks are down. And industry score, let's look that up from QH. It is not very strong, down, and I cannot say it is strong, nor very weak also, mixed. So industry is not so good, but I noticed it is food retailer. That can be a defensive industry. That is a defensive industry, food retailer. So Albertsons, ACI, I took a long position in that. By the way, sorry, let me come back to Kenvue. KVUE, I did not take a long position. I found it after market close during the weekend. Let me correct if I said otherwise. KVUE, I did not buy. ACI, I have a long position using stocks. And let's look at the last stock, CNMD. This is a bit more nuanced. In weekly, we already have a bullish headwind, came near the very low, tried to test that low, did not quite go to the watermark support. In the meantime, daily gave a bullish headwind. And if I scroll little bit, notice this is what I actually watched, and that is why I bought this stock. Let me come to this full length chart. It came to jump thrust low, price extreme low, gave a big move up 3 on this day. After that, price is trying to go up, coming down inside a triangle, created a bullish headwind at a higher low, retested that again on Thursday with a sharp gap down, but closing above this beautiful memory trend line support. And on Friday, it was going up. On Thursday, Friday, it closed above open. And on Friday, it closed far above Thursday's close. That is a stock that is bucking the trend. And I noticed the big move 3 up came here. I am expecting support at that price level, that trend line support held. So I bought a long position in CNMD even though the trend line resistance is there. In fact, I would also like to go to the pivot chart, intraday precision entry chart. I already booked partial profit also. Let me go to this stock. That's the use of the real-time aspects of Q systems. I could do all this in 100% real time. See, Friday on 5-minute chart opened here, opened here. Then very soon after that, it went above early range high. But the market was not doing that. Market was coming down because of that jump thrust, price extreme, big move 3 coming earlier. I was tracking this stock already when it was going up right after market open. While the market was falling sharply, I took a long position and I booked partial profit already in the stock long position, and I decided to hold the remaining position overnight as a position trade. So the big move up 3 at jump thrust low price also helped me to buy this. But before buying, of course, I looked at its fundamentals, and you will find something interesting here. I kept this one for the last for a reason. I did buy ACI and I did buy CNMD also. Let's look at CNMD's fundamentals and industry score. Beautiful. I like to see green cyan colors across the board. Has a small dividend, not big enough for that itself to be a reason for buying. Is a profitable company, undervalued stock, great earnings quality, and interestingly, across the board has positive earnings growth for 3 quarters, 3 years. Across the board, positive earnings, positive revenue growth for 3 quarters, 3 years. This is the kind of fundamental strong stock I'd like to buy. And yes, majority of stocks are down. By the way, in the insiders are also buying. Majority of stocks in the industry, healthcare equipment, are down on Friday. I expected that, but if I look at the industry score, I was not expecting this when I bought it, analyzed it on Friday. Not only it is one of the strongest industries, it is actually an up industry. Marginally, but still up industry on Friday, and an accelerating industry as well. I mentioned in this sharply falling market, it would be difficult to find an industry that is strong relatively and also up, but this is an exception. I was okay not to have up industry so long as the stocks fundamentals technicals were good enough at a lower price level. So I bought this stock as well. I did not buy KVUE, but I did buy CNMD and ACI. And lastly, I'd like to see only the other stock I shared in last market recap. It is always good to see. And thanks to Mr. Ian Urad, I'd like to come back to IGT's fundamental score. Let me explain the chart first. This stock is bucking the trend in a way because though market ETFs all closed below previous week's low, this did not. Closed inside previous week's candle, didn't turn bearish, it's neutral. A pullback is likely. After this was likely after this sharp up move where it hit the white direction line. It is likely, but it is an orderly pullback that is holding even the yellow direction line. And on Friday, price created an indecisive shape candle, but closing is slightly above open. So whether I look at weekly or daily or the yellow direction line support having higher high, higher low across the board, this is bucking the trend from a lower price level. And again, I mentioned that already in the last market recap. Let's go to the full page view. Very powerful pattern. Jump thrust low, price extreme low, came big move up 3. That level practically held. Then it gapped up, orderly pullback. I am expecting it to go up. I did not buy any stock until Friday, but this stock I tracked on Friday. I took an exploratory position, and if it goes up above Friday's high, I am going to add to that stock long position, make it a proper swing trade position. Currently it is an exploratory position, and why I bought it is because I already found the stock 1 week ago. I did not buy last week any stock until Friday, but I was tracking the two stocks, RYAN and IGT. RYAN went up sharply, this one orderly pullback, and I remembered the fundamental analysis thanks to Mr. Juan Woodward. Great valuation, decent dividend yield, profitable stock, and thanks to Mr. Box stock. I never ignore when this sell lights up. It's a box stock. I am happy to buy them if I get a low risk entry point. Last week that was not there when I discussed it because it had a sharp breakout. Now it may have, but in anticipation I took an exploratory smaller position. So let me keep those stocks in my panel. If you carry out the 360 degrees analysis using Q like that or your own way, you will most likely find other buying or shorting candidates today just as you would almost every other day. I am almost at 1 hour 30 minutes point. If you are still with me, you are amazing people, amazing traders. Thank you for that. Have a great weekend. I look forward to seeing you next week's session as well. And as I always say, as these live examples, I think certainly shows, there is no reason not to do that. Trade profitably in any market condition. Thank you.